Hello and welcome everybody. Welcome back to part 9 of our Step into Sectors series. This is the second to last episode, and today we turn our focus towards one of our newer but very useful tools. This tool, while it is something that is different compared to all of the other tools we've talked about so far on the dashboard, is one that is incredibly simple to get started with. So today, I want to introduce you to the tool. I want to introduce you to a strategy using the tool and show you how it can help you invest simpler. So, hello, welcome, let's get started with today's webinar. Quick disclaimer, we will talk a little bit today about strategies, and more importantly, we're going to use the words buy signal. Buy signal is not a recommendation to go and buy something right away. It is a term that is used, and it is not our term. It is quite literally the industry's term for these indicators. So please remember, what we share here is meant for educational purposes, not be taken as financial advice or investment advice, and please always do your own research prior to making any investment decisions. So, the topic for today is that we are going to cover another one of the tools on the SMS dashboard. The name of this tool is the P&F Setup Screener. Today, we're going to talk a little bit about what this tool is, how to read it, but more importantly, this series isn't about just showing you what the tools are. This series is about giving you the tools so that you can start using them right away. So we're going to focus today on a simple strategy that uses this tool. With that said, let's take a look at what we'll learn in today's webinar. These are the questions that we will try and answer. We're going to answer, what is point and figure? Why is point and figure useful for beginners? What do buy signals in point and figure look like? How do you read the P&F Setup Screener? What is a simple P&F strategy that we can use? And then finally, how do I use the breakouts scan? So, let's start with the basics. Point and figure is something that we've talked about earlier in this series, but in case you're just watching this one as your first webinar, I want to make sure that we can give you enough context so that you can follow along and still be able to use this tool. So, quick basics, what is point and figure? Point and figure is a type of stock chart where every type of stock chart uses some kind of way of keeping track of price changes over time. Think about it like a clock. Tick, 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 tick. Every single second is another moment. That is exactly how a stock chart works. You keep track of time in seconds or minutes or hours. Many stock charts keep track of time in hours, days, weeks. So every single day, hour, whatever it is, we check the price and add the price to that chart. Point and figure is a little bit different. Instead of each one of these ticks being 1 minute, hour, day, they are trends. Each trend is its own column or its own bar. The goal of this is that we can track a stock's price through its uptrends and its downtrends. Let me show you a quick example. What is easier to find? Can you tell me what trend this stock chart is in? Can you find the trends here? obviously, this is a pretty clear uptrend, right? I can draw. It's not letting me go. All right. This is a pretty clear uptrend. Is this the downtrend, or is this the downtrend? It can get pretty messy when we're looking at time to figure out trend. And what happens in a period like this, from October to December of 2022, when things are kind of just going sideways? Point and Figure tries to give us another way of looking at these charts, where instead of looking at price over time, we are looking at trends. So every one of these columns is a trend. Our columns of X's are upward trends. Our column of O's are downward trends. With this, it becomes much easier to find price breakouts. So, what we're looking at here is all of these columns of X's are our upward positive trends. Our columns of O's are our downward trends. So if we were to track this price over time, I'm going to zoom in so it's a little bit easier. This column of X's where you see the 7, it went up here, down, and the prices are on the right side. Hi Mofo, hi Nora, good to see you guys. So here the price went up to $196, went down below $172. Then it went up to $188, down to $174, up to $180, down, so on and so forth. So we can still read price, but instead of having to look at, a whole bunch of columns that might not really tell us much about the trend, here we see nothing but the trend. Remember that period that I said it kind of seemed like there wasn't much of a trend going on in October to December? There still was. And even within that period, there were these smaller trends that could have provided opportunities for investments. So, that's a little bit of an introduction about Point and Figure, but I want to focus instead on why Point and Figure instead of other types of charts. So, why we use Point and Figure, and for some reason the slide got a little messed up, so we're just going to have to imagine that the notes are going to be on the slide. Point and Figure is incredibly useful for beginners because it takes the guesswork out of finding these buy signals. Buy signals can be very clearly defined. So when we see a certain type of pattern, that pattern is a buy signal or is a sell signal. And there are tons of different types, but the only one that we are going to focus on today are what are called breakouts. More specifically, double top breakouts. These double top breakouts are simply where a column of X's goes above the previous column of X's. Let me show you. Going back to our examples here, we would have had a buy signal. Let's start right here where this 4 is. It went up, back down, up again. Right here would have been the buy signal. Up, down, up. Here would have been the buy signal. Goes up, down, and for a while we don't have a buy signal. So from June until October, we did not have a buy signal. Then in October, we had a buy signal, went down, and then another buy signal. So this is why point and figure is so useful. We can look at trends and think about, okay, a trend ended here. The next time the price gets close to that point, let's see what happens. If the price goes above the previous column, that means that something's different. Maybe a new product was released, maybe earnings came out, maybe that sector is just doing better right now. Something has changed that is leading the price to go above that breakout point. So that is, in its simplest form, what we are looking for. We are looking for where a column of X's goes above the previous. Point and figure basics teaches us that these breakouts are what we consider to be buy signals. And again, finding them on a chart is incredibly simple, and we just did a few examples of that. But seeing it on a chart is one thing. Using those signals is a little bit different. So how would you trade off of a point and figure buy signal? Unfortunately, finding the signals is very easy. Buying off of them can be a little bit more tricky. And this is where I like to say that science turns into art. There are many things in the world that are scientific. We can use logic, we can follow steps, and we can get that result. At a certain point, though, investing becomes a game of art as well. We have to be creative. We need to make our own decisions. We need to explore a little bit. And for some, that can be incredibly difficult. But let me show you what it looks like for point and figure. The most common way that people will use breakouts for point and figure is by setting a buy range. What this means is that when a stock goes on a point and figure buy signal, because again, that buy signal could have happened days ago. For example, Apple's buy signal happened on the 10th of November. That was a week ago. So, does that signal still matter? Buy range is one way of answering that question. So, we would still say that it is in a buy signal, or that we could buy it, if the price is 5 to 10% above the breakout price, not below the breakout price. For example, Apple. Here was that Apple's stock price. We can draw this blue line at the breakout point. So when the price went above $184, that was our signal to buy. So the breakout price was $184. And if we set a 5% buy range, that would give us a buy price between $184 and $193. So as long as the price is between $184 and $193.40, we would still say, that signal's worth it, let's buy. That works really well for something like Apple that has a lot of price movement. But we're missing one very important part of this entire equation. And I already mentioned it quickly. This buy signal was 1 week ago. Time is a factor. So we asked the question, is 1 week ago is it still relevant? Does it still matter enough that we would buy off of that buy signal? Because I'll tell you right now, point and figure buy signals are great, but they are not perfect. They do not always go up. Sometimes they go back down. Sometimes they break and then stay there. Or, for some stocks, their price doesn't move very quickly. So a buy signal might have happened 3 months ago, and it would still be in our buy range. So, let me ask you, if a stock went on a buy signal 3 months ago, would you still buy that breakout? My answer? Probably not. That's way too far out. How about 2 months? Still not. How about 2 weeks? This is where some people might start to change their answer and say, yeah, I would buy it if it was 2 weeks ago. For me, I probably still would. But how about 2 days? I think just about everyone would buy a breakout if the breakout was 2 days ago. But where do you draw that line? Where do you say anything this side of the line I would buy, anything that side of the line I wouldn't buy? Well, there's no right answer. That line is up to you to draw. But that's where the art of this entire thing comes in. The art is saying, well, I think I want to use 6 days, 5 days. Whatever number you have found to be helpful for you, you can use. But when you're learning, that's hard. Anyone that has ever gone to try and do some art can tell you right away, the first time you do it, it's not that fun. Because you don't know what you're doing, you're going to make mistakes, it's not going to come out very pretty. Similar things happen with investing. That's why we emphasize paper trading, trying out strategies for yourself, getting practice with them, backtesting to see real results for strategies. Doing the things for real is extremely helpful, and it builds up our confidence, but also our ability to understand the art side of it. So, one thing we can say, I can't tell you exactly where the number lies for where you would say, if it's more recent than this, I would buy it. But what I can say is that time is definitely a factor in how strong a buy signal is for you to consider today. So what if there was a better way? What if there was a way to avoid the issue of time or get away from the issue of time just a little bit? Well, let me introduce you to the Point and Figure Setup Screener. The goal of this screener is simple. We show you companies based on their point and figure status. So that entire chart, this entire thing, we squish it down into a few numbers. So instead of looking at a chart and having to see, okay, well, my buy signal, I'm already on a buy signal, I'm 1 box below this column of X's, I'm 12 boxes above the column of O's. What if we had a way of knowing that? What if we had numbers to put to the chart? So instead of looking at a bunch of charts, you can look at a bunch of values. And more importantly, filter based on those values. That's exactly what the Point and Figure Setup Screener does. This screener shows us how far from the current price this screener shows you how far the current price is from that buy signal. It also shows you how far we are from the sell signal, but that's a story for another day. That's a tool more meant for swing trading and not something we're going to get into in the basics. But the real goal here is that the best way to get away from how old a signal is to stop looking at when signals have already happened and start trying to see before they happen. Find them before they happen so the minute they go on a buy signal, you're ready. Because then you know the buy signal is fresh. It's more likely that the price is going to be within that buy range. There is a lot of value in knowing ahead of time what possible companies could go on buy signals, instead of having to try and play catch up. Once the companies are already on buy signals, you start trying to do the math to see the buy range. You start having to play that, what shade of gray are we in terms of how long ago the buy signal was. Let's find the buy signals the day they happen. So, the point and figure setup screener gives you a couple of different pieces of information. It gives you the ticker, which is the company's ticker symbol. Sector, what sector that company belongs to. This is the new ones. Boxes from support. How far is the current price from the sell signal? For this, we are counting the number of boxes, and the sell signal is simply the bottom of the most recent column of O's. So in this case, we would say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We'd be 11 boxes from the sell signal. If these numbers are negative, that means that our current price is below that sell signal. The other side is boxes from resistance. This is the one that we care about for today. How far is the current price from the buy signal? Once again, negative boxes are below the buy signal. So, if we are looking at this chart, it would be 1, 2. It would be 2 boxes below the resistance barrier. Once again, negatives here are below. So we are looking for negative numbers here. If we see that that number is positive, that means it's already on a buy signal, or it's already in a column of X's, and it's already above, not that it's in a column of X's, Friday, right? It's above its resistance barrier. So, in this case, its resistance barrier was back here at 184. So this would be 3 boxes above the resistance barrier. We can't call this a resistance barrier until we flip into a column of O's. So, to try and clarify what I meant, boxes from resistance, if we are trying to find companies before they go on a buy signal, we want these numbers to be negative. We want to be below that resistance barrier. Because going above the resistance barrier is that breakout. That is the buy signal that we're looking for. The current column tells us what the current trend of that stock is. X's are positive, O's are negative. Recent signal is the current buy or sell signal status. Breakouts are companies on buy signals. Breakdowns are companies on sell signals. Finally, company name is company name. Hello, Alvina. Good to see you. Feliz viernes. So, that's what all the columns mean. Let's quickly go and take a look to show you what that really looks like. So we'll load up the point and figure setup screener here. So we have ticker symbol, sector, boxes from support. Again, positive numbers are things above the support, negative numbers below the support. Boxes from resistance, negative is below that resistance barrier, positive is above it. If we are currently in a column of X's, so price going up, or O's, price going down. If we are in a breakout or breakdown, breakdown is a sell signal, breakout is a buy signal. And then on the last column here, we have the name. Another really cool thing about this is that if you click on any of these companies, you'll be brought to see the point and figure chart for it. So, let me show you a quick example here. Let's go to APD. We go to APD's stock. We find that we have a column of X's here, and our current price is 1, 2, 3, 4, 5 boxes below the or above the support barrier, and 1, 2, 3, 4, 5 boxes below the buy signal, the resistance barrier. So that is how we would read that. 5 boxes from support, so 5 boxes above the bottom of the O's, 5 boxes below the X's. We are currently in a column of X's, and this chart is currently on a breakdown. More specifically, a triple bottom breakdown. So, all of the information of that point and figure chart squished down into 4 values. How far above support? How far above resistance? Are we in upward X's, downward O's? And are we in a buy signal or a sell signal? We have this for 2,064 companies. This is not just the S&P 500. So, we are not limited to just S&P 500 companies here. That gives us a lot more choices, and with choices, that can be both a good thing and a bad thing. But let's focus on the good today, and let's focus on a simple strategy that we can use this setup screener for. What we want to do is we want to do point and figure breakouts. We want to buy a company the minute it goes on a buy signal. How can we do that? What we can do is we can look for and find companies that their prices are going up, so in a column of X's, and they're getting close to their resistance barrier, about to go on a breakout. We can then look at the point and figure charts to find the buy price and go into whatever stock tracking app you use and set price alerts so that you get a notification when that stock breaks above their buy price. That is the simplest way that you can use point and figure. Point and figure buy signals are a valuable indicator. Find a list of companies that are about to go on buy signals, set an alert, or when there's the price that they're supposed to break out at. When they break out, go take a look, consider if you want to buy it. That's how simple it is. Now, that might leave you with more companies than you might want. So, if we want to filter down our list from here, we have a few options. We can filter to only show companies in the leading sector. I'll show you how we can do that in a moment. Or we can filter to only show companies that are currently on sell signals. It is possible for a company to go on buy signal after buy signal after buy signal. Let's check out 2023 for Apple. Buy signal in February, no sell signal. Buy signal in April. Buy signal in March, no sell signal. Buy signal in April, no sell signal. Buy signal in May, no sell signal. Buy signal again in June. We had, let's see how long we went. We went 1, 2, 3, 4 buy signals, back to back to back to back, before we finally hit a sell signal. So, one thing we can do is we can filter to only show companies currently on sell signals, or filter to only show companies on buy signals. Both work. Try them out. See which one gives you a list that's more manageable for you. And then the last step that I would suggest is checking out the point and figure chart. Again, something we mentioned before is time. This still applies. We're not beating time here. So, taking a look at the stock price and the stock chart will give us a good idea of if there is enough movement. We want the stock to have some movement. Some stocks you'll see, they've been the same price for months. It's not really what we're looking for. We're looking for the guys that are making moves, because putting our money in an investment means we can't put our money somewhere else. There is opportunity cost. So if we're going to be buying off of a buy signal, we want that buy signal to do something. Simple. So that's the strategy. Find things getting close to a buy signal, set alerts, look to see if you want to buy it when they finally hit their breakout price. If that list is too long, filter based on a leading sector, or filter to only see companies currently already on buy signals or companies on sell signals right now. That's cool. That's also a lot of work. So we've tried to do a lot of the work for you. So to put this strategy into practice, we have made it incredibly simple. On the setup screener, there is an option to choose a scan. These scans are pre-built lists or conditions that you can search for. So, the one I want to show you all is called potential breakouts. With potential breakouts, we can see companies that are currently in a column of X's and are either at, so 0 boxes below, or 1 box below their breakout price. I feel like we've talked quite a bit now about the theory behind all of this, and I've done a bunch of hand waving. Let's actually go and look at the screener. Let's try this for ourselves. So, we're starting off with 2,000 companies. I'm not adding 2,000 companies to a watch list. I'm sorry. Here, we can choose our scans. We're going to choose potential breakouts. Now, every one of these companies, their boxes from resistance is either 0 or 1. We are now down to 321 companies. Still quite a bit. Well, now let's find the leading sector. 2 ways we can do this. Go to the matrix, sort by total count. We would find XLK, or technology, is the leader. The other way, the way that I personally prefer, is going down here on the S&P 500 screener and looking at the sector averages, finding the sector that has the highest average value. Once again, technology. So, let's go back to our point and figure setups. Let's filter to only show technology. Now we are down to 19. That's better. I can work with 19. If you can't work with 19, you can go here to the ... to the right of recent signal, choose filter, and here, if you only want to see companies that are currently on breakdowns, type down. If you only want to see companies currently on breakouts, type out. I'm going to focus on breakdowns for today. That gives us 14 companies. I can work with 14. The last step was take a look at their stock charts, see if you like them. First one, okay, yeah, it's approaching a buy signal. It's also in a pretty big negative trend represented by this big red diagonal line. Maybe there's better options. This one looks pretty good. On that last chart, A is October, B is November. So here we're seeing this was its movement in October. This has been its movement in November. It is approaching a triple top breakout. So 3 levels of resistance. And by the way, if you want a reason of why point and figure works, here's a great example. The price went up to 184 and went down. Went up to 184 again, stopped, and then turned around. Now it has approached it once again. The more times we hit that resistance barrier and don't pass it, the more it means when we finally break out above. So, this is a pretty cool looking chart to me. So, that would earn a spot on the watch list. What would I do? Go into my watch list, set a price alert for 184. Average value versus X count. What is the difference? X count, total count, everything here on the current matrix is market capitalization weighted. Meaning, these ETFs, the bigger companies matter more. So when you're buying XLK, you're not buying all of the little guys. You're mostly buying Apple. You're buying all of the big tech companies, Microsoft. If you want to see something really cool, and this is a great visual representation, FinViz maps. The box size here, the size of these squares is their market cap for that individual industry and sector. So you can see for some things like energy, for example, there are a couple pretty big boxes and then a lot of really small ones. Consumer cyclical. You got your really big ones and then a bunch of small ones. So whenever you're buying a sector, you're mostly buying these big boxes and then some of the little guys in there too. In contrast, the point and figure setups, the S&P 500 screener. Here, this is equal weighted. Every company, big to small, matters the exact same amount. The reason I prefer to use this one when I'm looking at companies is because I don't want the performance of the biggest company to influence my decision. To me, 5% return in the smallest company in the S&P 500 is the exact same as 5% return in the largest. So, if I'm looking at buying companies, I want to see the average performance of the average company, and yes, it is the S&P 500 still, but I want that average performance. I want to know how the middle of the pack is doing for these sectors. So that's why I prefer to use the sector averages. You use X count or positive trend, don't really have a good answer. Use what you feel most comfortable with. Most of the time, the answer is going to be the same. Sometimes it's not. Try them out. See what different options you get. This is where we get back into the art territory. What I'm showing today is supposed to be simple steps to follow, and this shows the rabbit holes you can go down. You can get as in-depth and as complex as you want in deciding how you pick a top sector. Also, just pick the top sector. I encourage you to explore these tools. We create these tools for this reason, to get super into it, to explore it, to see all of the different ways you can use it. For step into sectors, we're keeping things nice and simple. Look at the chart. Does the chart look pretty? This one is okay. Not so good. Go down the list, and again, this will start to make sense. You will start to see signs. By the way, this is a great example of something that the setup screener could have caught that went on a huge run today. This stock started off the day below 190, 0 boxes from its resistance, and took off. And we are now outside of that buy range, that 5% buy range. So we keep going. Here is a great example of a stock that doesn't have enough movement. What do we have for months? Well, let's go back. We have February, March, April, no May, June, July, August, September, no October, no November. This thing hasn't done anything in 2 months. If you want to see something really funny, let's quickly take a look at Tesla. Tesla's entire chart, by the way, at the bottom here, if you see a number, that's the year. There's no year, meaning it's all 2023. Apple. Here's where 2023 begins. All of this is 2022. This stock has had so little movement. You can go back to 2001. You can literally track the dot-com bubble crash through this stock's single point and figure chart. Really? If you're looking at a stock that you want movement in, a stock chart that brings you back more than half of my entire life, that ain't gonna cut it. So thank you, Infosys, for being a great example of what we aren't looking for when we're using this screen. Thank you. Let's continue though. Again, this isn't looking too pretty for me. This one is looking better. We got that triple top breakout. Yeah, it's down from where it was. That triple top breakout gives me some faith. I would probably add that one. And again, you don't need to marry every company you're putting on your list here. The goal is that you find choices. Find as many or as few as you want. Again, here, kind of in a downward trend, might skip it. Downward trend. Kind of sideways here. I don't really have much faith in that doing something. Not a lot of movement. We have August as our last piece of information. And then finally, do with that as you would wish. So for me, being the defensive investor I am, I would probably add these two companies to my watch list. And we only did one sector. Guess what? If you want more, go check out communications from XLC. Go back to the screener. Take industrials. So let's now try industrials. Let's try communications. This is something that, again, we just went through the entire technology sector in a few minutes. As you get more comfortable with these tools, you can do this very, very quickly. And again, what decisions I make off of if a company is worth adding to the watch list or not, you can have your different ways of looking at them. Studying the charts is the biggest piece of art of all of this. If you were just starting, forget the art, add 14 companies. Go to industrials, add 24 companies. Go to communications, that's not communications. Go to communications and add 3. Explore the tools. The goal of Step Into Sectors is you get a starting point. The starting point here is the scans. You can add them all to your list if you want. You can filter by the top sector to have a list of 14 and add those 14. Or you can spend a little bit more time, go into the data, look at the charts, study them, and see what makes sense for you. There is no right way to do it. The right way to do it is the way that makes sense. So, that is at its basic level, what this tool does. It looks at 2,000 point and figure charts, turns them into numbers, so that you can find the numbers that matter to you. And that's all for step number 9. We are approaching the end of the series, and step number 10 will be the last step on this journey. Step 10 is going to be a little bit different. We're going to show off some of the more recent updates that we've made to the dashboard. The goal of this is that while these webinars will live on our website, the tools on the dashboard will continue to evolve. And one of the most commonly used parts of our website is our strategies. Many Sectors Made Simple subscribers follow and use our trading strategies that we've back-tested, so we want to highlight those in a more prominent way, and those strategies will change over time. So if you're watching these videos in the future, you can still take advantage of all of those strategies as if you were watching the webinar that day. So, quick housekeeping. Next Friday is Black Friday. We will not have a webinar that day, or on Black Friday. So step number 10 will be coming to you on Friday, December 1st. But before you go, if you're interested in a Sectors Made Simple subscription and you don't already have one, or if you're an old Sectors Made Simple subscriber that's been away for a while and wants to come back and join us, we've got some great news. We are running a Black Friday sale for the first time in Sectors Made Simple's history, and also offering the biggest sale we have ever had on subscriptions. Starting next Monday, running for 1 week until Cyber Monday, November 27th, we will be running a sale on everything with SMS. Subscriptions, we are marking down the biggest discount we've ever offered, which will be 20% off your first period. So, if you're interested in an annual subscription, that gets you your first year at only $600. That's $50 a month for financial education, strategies, and resources. And that also includes us. we are your resource. Email us. Ask us questions. We are here to help you. So again, $50 a month for financial education and the potential to make more than $50 per month in gains. We had a webinar yesterday that one of our subscribers very graciously presented on how she's been using these different strategies, and the biggest compliment she could have ever given us was buying the Sectors Made Simple subscription was $600 well spent. We are teaching people to invest and grow their money. The cost of a subscription hopefully can be seen as an investment because there's profit to be made through the information and tools and strategies that we provide here. So again, subscriptions will be offered 20% off your first period. So if you buy 3 months, it's 20% off your first 3 months. 6 months, 20% off that, or 20% off your annual. Additionally, our standalone class series will be 50% off. So if you are not an annual subscriber, that is 50% off. If you are an annual subscriber and we already offer the 50% discount, that is an additional 50%, meaning the total cost would be 25% of the full price. So, if you're interested in joining us and taking advantage of these offers, please use the coupon code BF20 when you're buying your subscription, or to purchase the class series, use the coupon code BF50. If you have any questions or need help, you can always email us at support@sectorsmadesimple.com. But that is all the stuff that we have to cover today. Thank you all so much for joining us today. It was a pleasure to get to introduce you to the newest addition to the Sectors Made Simple Tools family, and we hope you all have an amazing and comfortable Thanksgiving, Black Friday, and we'll see you all back for the 1st of December to round out this series. Thank you all so much. Take care.